there, I'm Mac.
And I'm Kirk.
And we wanted to talk today about maybe some of the potential changes coming up based on the results of the election.
Yeah, we want to do this in the context of just looking at what could happen as far as regulatory reform or regulatory changes. We obviously aren't talking about this from a political standpoint. We're making no political statement, but clearly there's a change in administration. And as a result of that change, there's going to be impacts on the market and on the regulatory agencies that control the industry that we're in.
Yeah, a couple of the big changes we could see are some of the appointees that head up some of the departments that the new administration will be able to appoint into different positions. So one of those will be the CFPB, which begs the question of what will happen? What happened in the past with a Republican-led CFPB and what will happen in the future?
Yeah, I think FHA, HUD, and CFPB are going to be the agencies that are affected by the change in administration. The policies moving forward will look different. They will feel different. However, we want to caution, but the next couple of months are going to be volatile. Anytime there's a change in administration, I would argue even if it's a continuation of a similar administration, had Harris won, continuing at least philosophically the Biden policies, I still think it's a tumultuous time for the markets. There might be certainty about where the policies are going, but there's uncertainty in the markets and how it's going to affect everything overall. I think right now, making bold predictions about what the next 6 months are going to look like is silly. What we can say is the next month or 2 or 3 is probably going to be pretty volatile.
Yeah, with some of these heads of these departments potentially losing their job in January, we could see a flurry of actions coming up to try to make their name for their time in their department.
Or wherever they're going after they're done in that department. The CFPB has been pretty aggressive at times, and then they backed off at times. So we're not really sure what to expect with the knowledge that the administration is changing. As far as the interest rate market is concerned, I believe the Fed just did another 25 basis points today in reduction, and who knows where that's going to take us. Again, we have to address the inflation issue. Is there going to be a role for Elon Musk in the new administration? And is he really going to seriously take on the deficit? And if he does, what impact is that going to have on, if he's successful, what impact is that going to have on mortgage interest rates, inflation, and the bond market?
And one of the things we have seen in the days after the election is some rallying of the stock market, which generally speaking is not great for lowering of rates. When the stock market is doing well, typically you'll see higher rates to compensate for those changes in where investors are putting their money.
So what we're trying to tell you with certainty right now is that there may not be much certainty for the next few months, but change is coming, and it's going to be fairly significant because the political policies of the new administration vary and differ greatly from the past. So whatever else you're expecting, expect change.
Drop us a comment below, and for more videos like this, check us out at knowledgecoopplus.com.